Hey guys, this is Hafiz, and today I'm going to share some information about the pandemic and how it's affecting the trucking industry. Is it good or bad for the trucking industry? And also, um, I'm going to share some data like from past years that I have somehow, and I want you guys to look at it and make your own decision if it's worth going out there and is it really good for the trucking or not. All right, so the data that you're looking at right now, as you can see, I got the gross on a monthly basis. So I'm just going to scroll down and go back to a couple years, and let's suppose we go like 4 years from now. So today is May 31st 2020, and I'm going back to May 31st 2015 data. So you can see on top it's a revenue and expenses and profit, and you ignore all those parts. The only thing I want you to look at is that the revenue per mile right here. So if you can look at that, revenue per loaded mile and revenue per mile. So the loaded mile is starting from May is like $11.40. I don't know what we did on that time. I don't know, something really special happened, but yeah. So let's just go to the next one. I don't want to talk about that one. I don't know what happened on that time. So revenue per loaded mile is around $3.38, and $3.20 is revenue per loaded miles, and then $2.03, $2.70, and 306, 284, 351, 281, and 270. That's loaded mile rate. That's how much we were getting paid in 2015 and 16. And if you look at the overall, like loaded and empty mile, so that was around 272, 281, 351, 284, and 203, like that. That's how much we were getting paid in 2015 and 2016. As you can see, if you always go to the November, December, mostly the rate is a little bit higher. As you can see, it was 306 because that's the busiest time. So I'm just gonna go to most recent years like 2016. So the rate per loaded mile and empty and loaded mile is right here. So we're gonna look at it. So it's 2.71, and average like loaded and empty is 191, then 234, 160, 242, 342, and then 197. So if you keep going up, it's gonna come to most recent years, and as you can see, we are in 2017, and then 18, 19, scrolling. And I'm gonna show you one thing. In 2017, the crazy thing happened. So that was right here. As you can see, in November and December, the logbook rule was changed. So the e-log was implemented, and that's why you can see the big difference. The rates were really high because a lot of people, they were on strike, and I guess I was working. So we got a $5 per mile, and $3.60 was the loaded and empty mile rate. And then in December we got $5.42. That was the highest, I think, average mile per rate. $5.42 in January and December. So right after that, the rate dropped to 327, 331, $2.10, $3, around like $2 something, and then slowly it came to 2019. So 2019, as you can see, in like a lot of trucking company, they went out of business in 2019, April or May, March, April time. A lot of trucking company, they went out of business. A lot of truck drivers, they lose their trucks because of low business. And as you can see, the rate per mile at that time, as you can see, it was like $3.52, $3.33, $2.39, and then all of a sudden it dropped to $2.95. That was a loaded mile rate, but average came to $1.75, and then it went back to $1.82, and then it came back to normal in September, October, November. That was a holiday season, so it came back up again. So slowly we are in the current time period. So as you can see right now, revenue per loaded mile and revenue per mile is right now, like most recent May. It's May 2020, and the mile per rate is down to 162 per loaded mile, average mile. And then it's 164 in April, and it was March 191, 182, 194. So it's been like 4 to 5 months. It's below $2. It goes sometime, in a history, in the past, as I showed you before. So we were at $3. Now it's down to $1.62 revenue per mile, which is loaded and empty miles. So now on the left side of $1.62, you can see is miles per load. How many miles per load we running average, and that's like 1165 miles per load we running every time, and we're getting less dollar per mile. And before that, it was 966, 1100 before, and the rate was $1.82, and 800 and 603, 630. As you can see, the miles were less and the rate was high. So we were making more money in past, but I'm just gonna prove that we are still making same money, but I would say we're running more miles. As you can see, the miles per load is 1165, so we're putting extra 150 miles for each load. We're making less money, but we're still trying to cover expenses and stay in the business. So another sheet I'm going to share with you guys is that I created, so that can show you guys that if the trucking business is still worth doing the business or not. And I set some examples, and the assumption I'm gonna make is like the lowest mile per loaded mile that we did, or empty mile we did in May. So I'm gonna take that one as an example, that if it's worth working at this price or no. So as you can see, I just made a list of the expenses that we have every month. So we have estimated cost for each truck. If you are running as a trucking company, as a driver, or as an owner operator, so I'm gonna separate all of them later. But for now, it's like average expense. It's not the same for everyone. It could be a little bit more or less, but I'm been watching them for a long time, and I think it's pretty much close. So if you have a truck, let's suppose you are the owner operator or the company. So let's start with the company. If you are a company, you just bought a truck, so it may you financed it actually. So maybe a monthly payment is gonna be from $1,400 to $2,500 per month, depend on the year, make, and model that you are taking. If it's a newer truck, more payment; old truck, less payment, maybe less than a $1,400. And the same thing with the trailer, is gonna cost you around $700 to $1,200 per month. So but we're gonna take average cost, like for average and smart people, they try to keep their payment low every month, so they don't have to pay a lot of expenses every month. So the next big expense we have is this expense is a fixed expense. As you can see, I put on the chart. I categorize into two expenses. One is fixed expense and the other one is variable. So the second expense we have is insurance. If we are a company, we have three type of insurance: cargo, physical, liability, or maybe we can have a workman comp if we have employees. But let's just take it as a one truck for now, that we have one truck and we're trying to run a company with that. So if you are a trucking company, average insurance you may be paying altogether, I put the estimates there, average amounts, but altogether you may be paying around like $1,400 to $2,000 in a month. So I mean $1,400 to $2,000 a month. And average cost is like most of the trucking company, they're paying around like $1,600. So I put the average cost $1,650 average for the monthly insurance for the company. And if you're the owner operator, let's suppose you're another company, then you may be paying for the bobtail insurance coverage, and on top of that you have to lease your truck to some trucking company, and then you have to pay them for the cargo liability insurance, which I mentioned above. For the trucking company, they charge you for that and they add your truck into their insurance, and that's how you can work. So altogether it may cost you like $1,300 to $1,500 in a month, pretty much same like it's going to cost to the company. So the third expense we have is for registration. Mostly the truck registrations are like yearly basis. We cannot have them monthly basis or more than 1 year. So but I'm gonna divide into the monthly expense so we can see if it is covering the yearly cost also. So the truck registration costs $1,450 to $1,650, and the average monthly cost is like $125. And the same thing with the trailer, it costs you like $5 a month for the registration. And for the $22.90 tax, which is our yearly tax, it's like a property tax for the truck every year, and that's like $45 a month cost. And if you are a company, you have to file the UCR every year or 2 years, every year, and that's like $75 for 2 trucks, and we divide into 12 months, so that's like $7. And the BOC3 is like for one-time cost for the company, which we're not gonna include into this cost. And these are the fixed costs so far. We mentioned the truck, trailer payment, and insurance, and registration cost, and some tax. Now there is a variable cost, which is a quarterly tax that we may pay, which is IFTA tax. It could be from $100 to $400 every quarter, like 3 months. So we're gonna divide into 3 months. It's approximately like $100. It's a variable. It can keep changing up and down. Maybe you can get a tax return from the IFTA. And the same thing with the HUD New York and New Mexico tax, Kentucky tax. If you run any miles in those states, you have to buy the permit and then you have to file the tax for them. But average, if you like go to those states, I would say it may cost you like $50 a month max. So we're still adding those costs just to have the maximum cost in our list. And the third and the next cost we have is also a variable cost, which is operating cost. Like once we pick up the load and then we have to go for delivery, and anything operational on the road that costs us money, we're gonna add all those expenses into that. So with my estimated average cost for the fuel, I think it's around like 30 cents per 30 cents approximately, for the gross. So anything you do a gross, the 30 cents of 30%, or you can say 30 cents of that is the cost for the fuel. It depends on your gross income. So I'm sorry, I explained it wrong. It's like 30 cents per mile. And the toll cost, it could be like no tolls to you, or if you're running through northeast areas of Maryland and high toll areas, New York, then it's going to cost you some heavy tolls on this side. And but we're still going to mention that into our expenses that we are going there a couple times in a month. So it could be anywhere from 0 to 0.08 per mile. So we're calculating on the basis of the miles, how many miles we're gonna run. So we're gonna calculate our cost according to that. So the fuel cost is also gonna be calculated according to the miles, that how many miles we run, and we're gonna take that as a 30 cents per mile cost. So we have to get the service done every 12,000 to 20,000 miles for the truck, and that costs anywhere from $250 to $850, and we're taking that as a $500. I'm going to put that into a fixed cost because we must have to do that every month or every 12,000 to 20,000 miles. Between that, I would suggest to do that at 12,000 miles. The next expense we have is tires. Maybe you're not going to have any tires all year round, and maybe you're going to have a couple tires. Or maybe you have to put all the tires, and that could be variable. But we're going to add at least one tire every month, that we are changing a tire every month, because mostly the tires last for like 2 years. That's their life if you put a brand new ones. So we're still gonna take that cost out of that revenue every month. So same thing with the brakes. They last from 6 months to 1 year, and their average cost is like from $1,800 to $3,600 per year, and it could be no cost for the whole year, or it could be like a lump sum $3,600 for the drums and brakes. You have to change everything, and that's average. Like I would say average, we're gonna take at least one brake and one drum every month. We're gonna replace that, or we're gonna put that cost on the side, so that way we can cover the yearly cost on a monthly basis. So that's like $225. And any accessories you're buying, stuff for the truck, lights, bulbs, fuels, and same thing with the tools. And that's like, it could be like no cost or one-time cost for you, but we adding those expenses on a monthly basis. So I added $100 for the month for accessories and tools, and the same thing with the towing insurance. So the towing cost could be a lot if your truck broke down and you have to tow your truck from there to the shop, and that cost a lot of money. So you can have an insurance coverage, like a towing insurance coverage. You can buy that insurance, and you may have to pay only $50 a month, and that's like a $500 a year. If you buy that insurance, you don't have to pay the towing cost, and one insurance, like one tow, can cover your yearly cost. So that's why I'm putting only $50 for that every month, that you are taking that insurance coverage that helps you for covering that cost on a yearly basis. That's like $500 every year, but we're adding $50 every month. Now same thing with the road service. At least the minimum road service is gonna be like $400, and if you do the $400, that could cost you up to $7,000 a year if your truck is old, and you never know, on the road we have a lot of stuff, so we put that cost on the side. So on the monthly basis, we're gonna have a one road service at least every month added into our cost. So if we don't have a road service, we save that money. If we have that, we have that in the fixed expense. We're gonna put that in a fixed expense, take that money out. So insurance deductible is like if you have a claim or a cargo claim or any kind of accident, then you have to pay that insurance deductible. Hopefully we don't go through that process, so that's why I'm not putting any cost on the monthly basis, but that could be anywhere from $1,000 to $2,500. And another fixed cost is the parking for the trucks. So it could cost you from $100 to $300 a month, or maybe no cost, maybe parking on the street inside your house or something. But I would take minimum $150 a month for the parking cost, and minus that from our revenue. Same thing with the scale tickets. We have to wait over trucks and trailers when we pull loads, and any tickets or violations we have on the road, it could cost us $45 to $500 per month. Why I'm putting that low is maybe we don't want to have any tickets or violations, but if we do, then we can have is a trucking service for the lawyers, which is like TVC and so many other companies. They offer services. If you have any moving violation and you are a member with them, they pay the tickets, and they hire the lawyer, and you don't have to pay anything to them. So I'm assuming we are taking that $50 cost on us on a monthly basis, so we can avoid any violations and tickets for the year. So that's like a $500 a year. And on top of that, if we buy any permits like a HUD, New Mexico, or any permits when we crossing or entering into the states, that could be anywhere from $40 to $2,400 a month. But it depends how many time you get into that. That's like a year. I put it a month. So I'm not adding that cost into the total cost right now, because sometimes we buy just one-time permit and we file with the IFTA, so I'm putting only zero, but that's good to have it in there. And on top of that, we need to have a truck wash occasionally, so we can avoid the rust and any to make our truck look nice, so the DOT don't pull us over very often. And then we have some financial cost, which is like a dispatch fee. If we are using a dispatch service from someone, and let's suppose we are the owner payer, then we have to pay anywhere from 5% to 15% of the gross. But average, I would say, if you have a good company, they may be charging 8% like me. And there is a factoring cost, which is if you are a company, then you have to factor your loads so you can get paid the same day, because most of the companies, they pay after 30 days or more than 30 days. So you don't want to delay that long, and you pay upfront cost, and it could be anywhere from 1% to 5%, but we're taking that as an average cost of 3% if we are the trucking company. So the same thing, if we are the trucking company, sometimes the factoring don't take certain brokers because their rating is not good, so we can get a quick pay from them directly, so they can pay us directly, same day, 2 day, or 7 days. Everybody have a different payment plan, so it could cost us anywhere from 2% to 8% of the gross amount or the invoice amount. So we're taking that as an average of 5% cost for the quick pay if we take that cost. And the same thing, unloading fee, mostly the customers, they pay that. We're not responsible, but if it depends on your contract, if that's a cost, you have to add that cost in there. Now the fuel advance fee, it's like if you take a fuel advance up to 40%, whatever their rate is, in this case, we assuming we're not taking any fuel advance. So annual tax, it depends over profit, how much we show over profit. And on top of that, we have a big cost, which is labor cost. Let's suppose we have a driver and we're paying the driver per mile rate. And I know if it's a good driver, they charge more money, but average driver, they start from $40 like new drivers, and they go up to 50 cents per mile. But if they're running local or regional, then they get paid up to like 70 cents per mile. And we're taking as a 45 cents per mile driver rate, and that's not like average rate standard. That's empty and loaded miles. And on top of that, let's suppose if we have a dispatcher who's actually finding the loads for the driver, keeping him moving and get him loads. We are paying him for bookkeeping and all that stuff, like average $600 per week. So, and then we have some office expenses, load board costs to find the load, and maybe we are using like a software like a trucking office or truck stop for accounting purpose. It could cost you from $20 to $100. If you're not using it, you can use an Excel, and you don't have to add that cost in there. Just like that, office supplies and internet, phone, computer, furniture, and office rent. If you have an office and you're paying a rent for that. So in this case, we are assuming a one truck company. We are not paying office rent. We are running business from home. We're not buying any computer. We're not. We are paying for the phone, which is like $80 a month average. It's a variable cost, so I'm adding on the side. So software cost is like $10, $20 per month, and office supply we're just using $10 per month. Load board we are paying like $45 per month for DAT or truckstop.com. And for the driver average, we are running, let's suppose average truck, I calculated I think at least the driver, if it's a good driver, they should be making at least 12,000 miles in a month. So that's like barely 3,000 miles in a week, and that's like 500 to 600 miles in a day, and he take at least 2 days or 1 day off in a week. So I think that's very fair miles for someone, 12,000 miles in a month, and we are calculating according to that. So we are multiplying that with the 45 cents, and we're getting a $54 for the driver. So these are the variable costs we are adding on the side, and we are assuming we are not paying for the dispatcher right now. We are just the company, and we're just running business ourselves. We have the driver, we have a company, and I just added those costs, variable costs on the side. If we are paying somebody a dispatch fee, then we are gonna pay them approximately 8%, and that's based on the gross income, how much the gross income we are making. So in this example, I'm just gonna drag the sheet up. In this example, we are taking a different mile per mile rate, and that's gonna affect our monthly gross income. So now I'm just going to show you these 4 columns on the right side. If you look at it closely, it shows all those costs that I mentioned earlier. So in this example, we are working as a company. Let's suppose we are a company with only one truck operation, and in first example, in the green that you can see, we have 12,000 miles, and we have $1.66 per mile rate. That's average rate. And then we have a gross income $20,000. If you multiply 12,000 miles to $1.66, so that's the rate, the lowest rate we got in May, because the trucking is very slow. So that's the lowest rate we are taking in this example, and we're making only 20 grand because we are running 12,000 miles in a month. So now we are paying for the truck, which is $2,000 in this example, and we just drag that amount into this example for the truck, and we pay the $1,000 for the trailer. Also, we have a company, because we are taking this example as a company. We pay $1,650 for the insurance and $125 for the truck and the trailer registration. We also pay the tax, $22.90 for the year tax, and you see our costs. We divided everything into the monthly basis, and we also paying $100 if the hut for $50 each. And the cost for the fuel, how we calculated it, is per mile rate. So like I said, the average fuel cost is like from 25 cents to 38 cents per mile. Whenever you have to calculate it or try to make a trip and then you calculate it, you should be around this range from 25 cents to 38 cents. It depends on the price of the fuel, but if the price is high, it could be high range. If it's low, then it's going to be low range, but average I would say is around 30 cents per mile. And the same thing for the toll. We are assuming that we went through the tolls and we are paying 0.04%, $0.04 for per mile rate. And if you multiply that to 12,000 miles that we assuming in this example, our toll cost came to $480. And just like that, we drag that service, like we did a truck service, $500, $300 for the tires, brakes, accessories. We added all those expenses in this example. So we're going back to the example. Now on the other side, we have the only difference we're gonna make is that we just changing the mile per mile rate. So in the second example we have $1.75. The third example we have $1.91. Fourth one we also have $1.91. So I'm going to tell you the difference between those two, the last two. So all those fixed costs are there. If you look at these examples, I just changed the rate. So because we got paid $1.75, we made a $21,000 gross. If we got paid $1.91, we made a $22,900 gross. So, and like I showed you before, we made more than $2 per mile, and before in the history. So if we drag all those costs, I put all those costs same, nothing changed. All those costs changed. So the only thing we change is the mile per mile rate. So everything else is same, no changes, except the fuel cost is it's because of the 12,000 miles, so it's going to be the same. The only thing is going to be different is our financial cost, which is, as you can see here, is $600, $630. Is because the factoring, we are taking a factoring fee. We are not taking the dispatch fee because we are doing over on dispatch. We're not taking quick pay fee. We're not doing any unloading. We're not doing any fuel advances. So we're just charging ourselves 3% of that, which is 3% of the gross. So it's changing a little bit because of the gross income. So we are taking that amount in there, and we assuming we paying the driver the same amount because he's running the 12,000 miles. So we paying him 45 cents per mile. So we paying him $54. So that cost is same, and other than that everything is same. So in this example we are a company and we paid all those expenses, and the only thing changed is the dollar, the mile per rate. So now the results are that the gross profit we made are, if we make $20,000, we are saving $2,600 after paying the truck, trailer, insurance, driver, and everyone. But we're not hiring a dispatcher in this one, in the first example. So the second example, we just have a 10 cents difference in the price, and we are making $3,600. In the fourth example, we are making $5,500 just because the price of the loaded miles or empty miles went up to $1.91. Now in the fourth example, the only difference I want to show is that if you have a dispatcher, as you can see, all other example don't have a dispatcher cost, which is $600 right here, and you don't see those, but except in this one. So let's suppose you're not doing anything, you just set up a business and then you have a dispatcher, let him handle the driver, and he do really good and get us a $1.91 per mile rate, and we still make a $4,900 profit. But if we do everything ourselves, then we make a $5,500 profit. So this example we just did look at the profit of the company, that if we are a company and we are getting paid a certain mile per rate, then how much is our average cost in a month, and are we still making money? Is it really worth to do trucking or not? Now in a second example I am going to move is if we are owner-operator. So if we are owner-operator, let's suppose we are the owner-operator and we are working with some company because we don't have a company. So we just bought a truck and we're paying installment and everything. So let's assume the same exact gross income on that one. So let's suppose we are the owner-operator and we start from the $1.75 per mile rate, and we made a $12,000 miles on that. So the starting income is $21,000, and you can do the same example like $1.66, but I want to show only 3 examples in this one. And we have the same exact cost like a company, like we're paying for the truck and trailer, and we're paying for the insurance, which is in the previous example you could see we added $1,650 insurance, but it's in this example we adding only $300 for the bobtail physical insurance for the truck, and then we are paying a $1,000 for the cargo liability insurance to the company, and that cost is there, but it's not the $1,600 cost added into this example. So the next cost remains same, that we are paying all those truck and trailer registration, IFTA, and fuel, tolls, and everything is same. So as we are the owner-operator, so we don't have a factoring now. So what we're doing is we are paying the dispatch fee, which is depend on our contract how much we paying a dispatch fee, 5% to 15%, but in this example we're taking 8% dispatch fee to the company, that as an owner-operator, because we're using their DOT, MC, and they are dispatching us, they have a dispatcher giving us loads, so we are paying them 8% cost of the gross income. So in this example, as we have already calculated, the cost is $1,680 cost for the dispatch fee, which is on the base of $21,000 gross income, and on this example we are doing $22,000 gross income. So if we go down and we see that cost is there, and we are going to minus that $1,680 in as a dispatch fee, that's the difference as an owner-operator. And now the third cost, another cost which was there, but we're not adding that in this example, that is the $5,400. That was the driver pay we were paying as a company. So as a driver we were making 45 cents payment to the driver, but now we are the owner-operator, we have our own truck, so we're not paying any wages, so we're driving the truck, so that cost is gone. So now we have this example like 21,000 and $22,920 dollars. So we pay the 8% dispatch, we pay all those expenses, we pay the truck, trailer, and all those payments, and we made after paying everything, we did a gross $21,000, and after paying tolls, fuel, insurance, trucks, and everything on a monthly basis, our expense came to $12,530, and our profit came to $8,400, $8,470. If we make a gross on the basis of $1.75 per mile, so if we make a gross on the basis of $1.91 per mile, then our net profit came to $10,236. So these are the two examples as an owner operator. If you buy a truck and you decided to lease to some company, and after paying all those costs, you still make $10,000 if your rate is $1.91 per mile. Now in this market, like let's suppose the COVID-19 situation going on right now, so if we treat like, okay, we just made $1.66, which we consider in the company example too. So if we do this market and we're making only $1.66 per mile, so another thing I mentioned before, that was that if the rate per mile drop, they will increase the mileage, so you're gonna have more mileage and you will have a less dollar per mile rate. So let's suppose you did only $1.66 per mile, but you are adding 15,000 miles now. Beside 12,000 miles, you're running 15,000 miles in a month. So what's the difference it's gonna make now? Because you're running more mileage, so $1.66, you multiply that, now your gross income came to $24,900. And as you can see in the previous two examples, they were like 2,100, 21,000, 22,000 a month, and now it came to 24,000 a month, just because you ran extra miles. Now it's a low rate, it's very desperate, but because you are pushing yourself, trying to make money, survive through this time, and you putting extra miles, 3,000 miles extra, that's like a 1 week run. So you divide it into 4 weeks, like driving around I would say like 800 miles, 700 miles approximately. So if you drive 700 extra miles in a week, that is gonna put you at the 15,000 miles radius, and now you're making 24,900. All other costs remain same except the dispatch fee that you were paying less. Now you're gonna pay more, and your fuel cost, it was less before. You were paying $3,600, right? $3,600 was the fuel cost, and now because you ran too many miles, so it went up to $4,500. And before, your toll cost, it was low at $400. Now you ran extra mile, it came to $600. And on top of that, your extra cost is gonna be a dispatch fee. The 8%, you're paying $1,800. Now you're paying $2,000, approximately $1,992 for the dispatch fee. So all those expenses will be increased because you are doing more gross income now and you're running less mileage. So now we're gonna go at the bottom and do the total and see how much it came up to. So in this example, we see that we made $24,900 and our expenses are more than before, $13,942, but our gross income is more, and our net profit almost close to the highest per mile rate we were doing. That was 10,236. Now we're making 10,958. So it's not that you are losing money, but you're putting extra miles on your body and your truck. So you're working harder than before, but you're making the same money. So now we cover the same topic with as a company, and also as owner operator. Now we're gonna take this as a truck driver. Now if we are just a truck driver, how much we gonna make, and or how much we can make in this time, or by the mileage. Most of the companies, they pay per mile rate. So in this example, we're gonna take the same mile per rate that we were doing before, and we're running, let's suppose, 12,000 miles, and we're getting paid 45 cents per mile. So and on the other example, we're taking for the current situation that we are the driver and we are putting 15,000 miles per miles per month, and on top of that, the company reduce our pay because they're not making enough money according to them. So they reduce our pay from 45 cents to 40 cents per mile now. So now, because we don't have any truck payments, we don't have any insurance payments, we don't have any other cost, all the costs are the company responsibility now. So our paycheck came to $5,400 if we do 12,000 miles, but it comes to $6,000 if we do 15,000 miles. But our pay per mile rate is also reduced to 40 cents. So even making a 40 cents per mile, because we have to push ourselves and make extra money, so we are still making the same money or more, but we're running extra mileage. So the only thing I'm trying to say here, that when the market is slow, then all we have to do is work a little bit harder. We have to run more mileage, and for the less money. And when the market is really good, what we do, we take a high mile per rate and we run less miles and we make the same money. So it's never like if the market is really hot and everybody's keep running, so everybody try to take their home time or day off because they already cover their expenses. So in this worksheet, like I made the Excel sheet I made for you guys, if you guys need this, or you want to put your actual expenses and see how much you making or how much your expense should be, you can comment below and I can send you a copy. Give me your email and I can send you a copy so you can put your expenses in there and see how much is your actual expense and are you making money or not. So please let me know if this video helped you guys somehow, or to understand if the coronavirus and the slow trucking business is still worth doing it, or is it making us enough money or not. And on top of that, please be safe out there and make sure your loads are fully locked and secured because of the situation, and don't go through the crowd, and try to park your trucks at a safe place and try to get the maximum coverage on trucks because the world is getting crazy out there. So hopefully everything will be all right, and please remember me in your prayers, and subscribe to the channel, like the video, share with your friends, and I'll see you next time.